Welcome to Greenshoe Radio. I'm your host, Mark Bunting. Our guest today is Aurora Davidson, President, CEO, and a Director of Amerigo Resources, which trades under the ticker symbol ARG on the TSX and under the ticker ARREF over the counter in the United States. Aurora, good to see you again.
Thank you for having us back. Great to have a conversation with you again.
Now, the last time we talked in November, you described Amerigo Resources' unique business model and its relationship with Codelco, the largest copper miner in the world. Now, before we discuss Amerigo's 2021 production results, which came out recently, and guidance for this year, for those who don't know, could you give us a brief refresher on the company?
Sure, absolutely, Mark. Amerigo produces copper in a unique way by processing the tailings from the world's largest underground copper mine, which is Codelco's El Teniente mine in Chile. Tailings is the waste material from a mine. So one of the takeaways from the Amerigo model is that we transform environmental liabilities into economic assets. I like to refer to Amerigo as a copper factory rather than a mine. Our plant in Chile receives all of the tailings that are generated by El Teniente from its daily production, and those are called fresh tailings. We also have the rights to historical tailings that were deposited by El Teniente over many decades of copper production. The fresh and historical tailings are then processed in a traditional concentrator plant to produce copper concentrates. We are, in fact, the only operation in the world that is fully focused on processing tailings on a large scale. Amerigo produces over 60 million pounds of copper a year. And a final point in the recap, Mark, is that we are highly levered to copper prices and generate substantial cash flow under the right copper price conditions, as we will surely discuss in our conversation today.
Now, Aurora, you've described 2021 as a transformative year for Amerigo. Production was above the company's guidance, costs were below guidance, and fresh tailings, which you were referring to there, made up a larger percentage of production. So can you run us through some of the highlights?
Yeah, we're very pleased with the operational and financial performance of Amerigo in 2021. From a production point of view, we have achieved a stable and consistent operation, and we have also looked at opportunities to do more with what we have. For example, some of the work that we did to do this started in 2020 and led us to making some changes in the plant to process most of the fresh tailings that we received from El Teniente while still having good recovery rates. And this is great news because not only did it allow us to beat our production guidance last year, but also, and this is very important, to the extent that we can tap more into fresh tailings, we deplete the historical tailings at a lower rate. Higher production has the benefit that it also results in lower unit costs. So even in the face of inflationary pressures, Amerigo's cash cost in 2021 was lower than guidance. Now, the real beauty of this is to have good production results and strong metal prices. That is a transformative element. Right now, we haven't published yet our year-end results, so I can only discuss financial results for the first 9 months of 2021, and those included net income of 31 million US, EBITDA of 60 million US, earnings per share of 17 cents US, which is 22 cents Canadian. On the back of these results, in 2021, Amerigo refinanced its bank debt and removed the restrictions we used to have in order to return capital to shareholders. So from a share price performance, all of this news combined have helped us move the share price significantly. We had a share appreciation of 83% in 2021 from 80 cents Canadian to $1.46 Canadian.
Now, I want to get to share buybacks, the dividend, the share price, which you were talking about there in a moment. But let's pick up on the financial results, which are going to be released on February 24th for 2021. And you also have an investor conference call scheduled for February 28th. You gave us a bit of flavor there. What else can investors look forward to? I know you can't give us the actual numbers just yet.
No, I can't, but I can tell you that one of the nice aspects of Amerigo is that it has a simple business model with very predictive EBITDA and cash flow. We basically can know what the financial results are going to be once you know the production numbers and the price of copper. Now, I can only discuss information in the market, but our financial results in Q4 will be aligned production-wise to Q3. We essentially had the same level of production. Copper price was stronger in Q4. So the earnings call on February 28th we'll be reporting strong annual results, and we'll also provide the outlook for 2022, which is setting to be another strong year for Amerigo.
All right, very good. And Aurora, the company returned nearly $12 million to shareholders in 2021, $9 million through share buybacks, nearly $3 million through the dividend. Also in late November, Amerigo announced a follow-up normal course issuer bid to purchase as many as 10.75 million shares over the next 12 months into early December of this year. So remind us about the thinking and the strategy behind the buybacks and the dividend being reinstated a while ago.
Sure. I think this is a very important part of the Amerigo discussion these days. Amerigo views dividends as an important part of a shareholder's return on investment. And commencing on Q4, as you mentioned, Mark, we put in place a quarterly dividend policy where we currently pay 2 cents Canadian per share per quarter. Based on Amerigo's year-end price of $1.46 Canadian, this represents a yield of 6%, and the dividends will be costing the company approximately $11 million US per year to be returned to shareholders. Now, the objective of the dividend policy is to have steady, safe quarterly dividends that can gradually grow over time. The amount of the quarterly dividend will depend on the company's quarterly financial results, the copper market outlook, and the maintenance of appropriate levels of working capital. Now, in addition to returning capital to shareholders via dividends, Amerigo has also instituted, as you mentioned, a share buyback program. With share buybacks, essentially what we're communicating is our view that Amerigo's market share price does not yet reflect its intrinsic value, and thus it makes good sense to retire shares at market prices. In November of last year, we completed a substantial issuer bid and bought for cancellation 7.1 million shares at a cost of $7.4 million US. After that, we initiated a normal course issuer bid, and the idea is to be able to cancel up to 10.75 million shares. The normal course issuer bid has been very active, as the company has already repurchased 2.2 million shares as of the end of January, which leaves us with room to purchase another 8.6 million shares under the normal course issuer bid.
Turning to 2022 guidance, Aurora, Amerigo is projecting nearly 62 million pounds of copper production, an average copper price of $3.90 a pound, which would be below last year's $4.22 average and below the current price as well. You're also forecasting cash costs to be slightly higher than last year. What are the drivers overall? And also, what are the variables investors should be aware of, especially as it relates to currency?
The fundamental data of our guidance mark is production, which, as you mentioned, at 62 million pounds of copper, is expected to remain strong in 2022. It is also important for us to provide guidance on cash costs, and we have done so, indicating that we expect that there will be an increase of about 15 cents per pound to a guided 2022 cash cost of $1.90 US per pound. The 15 cent per pound increase would be coming mostly from 6 cents per pound. That is a result of higher smelter and refinery charges, and that is an industry-wide benchmark. That's everybody is facing the same increase in treatment and refinery charges. 4 cents is expected to come from higher steel costs. That's just market-driven. 2 cents from lower molybdenum byproduct credits, and only 2 cents from all other costs combined, which is quite an ambitious projection to have under inflationary pressures. In that 2 cents per share combined of cash cost increase, we have factored in the effects of a less strong Chilean peso compared to the US dollar. So that helps us as a cost containment mitigator in our cash cost projection. Now, no one knows what the price of copper was going to be, and no responsible manager we'll come up with an aggressive copper price and run with that price to make the numbers look better. So what we disclosed in our press release with respect to the 22 guidance was just a copper price of $3.90 per pound, which is quite aligned to the 2022 forecast from Chile's Copper Commission. And that's just to provide an indication of what EBITDA would look like at such a price, given the factors we can control, which are production and cash cost. Now, as a side note, a generous average price, which we now know, was $4.43 per pound. So we're ahead of that price indication already.
All right. So having said that and factoring in those variables, Amerigo is expecting about $50 million in EBITDA in 22. And I take it you're confident you can achieve that number, or at least if not exceed it.
Well, the 50 million EBITDA is predicated on a copper price of $3.90. So that's the first clarification. I am confident that our production and cost targets are achievable. And I also believe that the 2022 average copper price, which we have indicated just as an indicative price of $3.90, could be higher, which would make that EBITDA goal not only achievable, but we could go above that. And that's based on what we're seeing so far, copper price-wise.
Now, I understand, Aurora, since Amerigo bought MVC back in 2003, that the company has invested more than $300 million into the operations. And this year you're planning to spend more than $13 million, roughly, on various capital expenditure and maintenance programs. Can you explain the impact on return on investment for the company that results when Amerigo is continually upgrading the operations like that?
Yeah, and the short answer is that the more you invest on the right capex, the right maintenance, the higher your operational continuity is, and the least disruptions to production you can expect. So it's an investment that pays immediately, Mark. Our annual sustaining capex, which is the money that we need to spend to maintain capacity and operations at existing levels, is usually about $6 million US a year. In 2022, we will be working in 29 separate sustaining capex projects, and our target cost is precisely US $6 million. Now, this year, we're going beyond sustaining capex arena, and we will also be undertaking two projects that, in our opinion, are needed to mitigate risks at a cost of about US $4.7 million. And those are important projects. We have the money to undertake them now, with the goal of reducing any potential interruptions to production. One project consists of installing floaters to protect the lines that connect the old tailings deposit to the plant, which could be damaged if you were to have a massive rainfall event. The other project is going to be to upgrade the high altitude channel that transports fresh tailings within our facility. So we're looking at what could go wrong and what can we do to ensure that those risk factors do not materialize. Now, we also capitalize under accounting guidance some of our maintenance work and critical spares, and we expect that will cost us about $2.8 million this year. So we're confident that with this thorough CapEx program in this year, we're going to be having a very robust preventative maintenance and preventative CapEx deployment ahead of us to ensure that we can continue producing at these high levels that we have seen in the last years.
Lastly, Aurora, Amerigo stock was trading around $1.34 a share when we last spoke in November. I noticed it got as high as 172 or so. And as we speak right now, last time I looked, it's trading around 162. I know you think that the stock is undervalued based on your answer about share buybacks. What's your impression of the market's perception of Amerigo Resources as an investment right now?
Mark, Amerigo is definitely garnering more attention, and we have noticed renewed investor interest in the company. We have established credibility, and we have shown consistently good quarterly results. Particularly, I believe that quarterly dividends have been instrumental in getting us more noticed and setting us apart from other mid-tier copper producers. Investors have seen share price appreciation, an established dividend with an attractive yield, and share buybacks. So I'm confident that 2022 looks like a very positive year for Amerigo in respect of its projected share price performance.
Aurora, we will look forward to the financial results on February 24th. and the investor conference call on the 28th. Thanks so much for joining us once again. We'll talk to you down the road, and good luck with everything.
Thank you, Mark.
You've been listening to Greenshoe Radio. Our guest has been Aurora Davidson, President, CEO, and a Director of Amerigo Resources, which trades under the ticker symbol ARG on the TSX and under the ticker ARREF over the counter in the United States. Thanks so much for listening. I'm Mark Bunting, and we'll talk to you next time. Take care.